Good morning. Today is the 16th of January. Let's look at the weekly chart. As always, we see this week so far has been open, high, low. So today is Friday. Let's see where we get to the close. Overall, this is still bullish. Right, so is all-time high next? I doubt it that we get all-time high now on Friday. However, let's see. We see here that this week has taken this level. That's great. Used the opening of previous week as fuel to return to higher prices. What else do we see? If I look at where price displaced in context of the entire range here, I'm actually going to go to the 4-hour chart because it's cleaner. And what do we see here on the 4-hour chart? We see displacement from here in context of this range, right? There we go. And we have had price coil around the equilibrium area of this range. Now, as we did previously with each day, we will go to the actual impulse. And the impulse we are interested in, it's right around here, because we have this BPR and we had yesterday's the day before yesterday we have had this drop into this balanced price range in context of this impulse. There we go, right? So we have had price take liquidity here, changes the state of delivery, comes into the BPR. Now, what do we have today? We have, one second, let me change the demonstration. Okay, now in context of this is previous week open. In context of this new piece of information that the market left behind, we have this impulse from there to there. Overall, as I said, it's a bullish market on the weekly, and we see liquidity grabbed here below this low. This is, think about this as a liquidity pool, everything around here. We also have this price bounced from this volume imbalance, from this imbalance area, and grabbed liquidity here as well. So what else do we see? We see that is this balanced price range, of course, and we see that now the market created this order block. And to continue, price came down and tapped this order block and is now going higher. So in this context, we have had internal range liquidity, and better yet, in the context of this impulse here, we have had internal range liquidity, now going to external range liquidity. Now that we established, we're going back up to likely this level, right? Probably. We will refine it in a moment. That's our draw on liquidity. We can fine tune this. Let's go from this low to this high, and that's our range. Oh, what's that? Let me remove that. And that's our range for this impulse. And what do we see? We see that liquidity has been taken here. Liquidity grabbed here. Price comes down into equilibrium, into this imbalance, goes back up. So we have, as you can see here, we have this 4-hour imbalance. Currently price trades through it, and there are 16 minutes approximately left on the clock for this candle to close above this imbalance. If that happens, we are looking at prices, at higher prices into this order block. This order block actually, and we can measure 50% of it right around there. So we could say that the market will make its way to this level. So this is our low hanging fruit level target for the London session, I would say. All in all, for the entire day, given our bullish bias, I would say it's this level. Or even that level. But another thing, let's look at the weekly chart. If we see the weekly chart as it is now, small wick on the top, large wick on the bottom. Usually this kind of candle, the most we can expect from this kind of price action is that it closes near the open. So with that piece of information, we can see actually that the TP we marked for ourselves here, it's actually the close to the open of the candle. And considering that we have this balanced price range here, I would lower my expectation and have the ultimate TP on the edge of this imbalance right there. Now we can fine tune this additionally. Yesterday I showed you, if you go to a line chart, you can properly mark some levels, some peaks based on the peaks here. So the more peaks or troughs that touch a line, the better confluence you have. That's support or resistance, right? So in this case, you see the low hanging fruit target. It's this peak. That's low resistance. Actually, yeah, it's a pivot, but it will be quickly taken. So low hanging fruit. But if you look higher, we do have this peak there. So that's not a bad target to have. There you go. So that would be around the open of the weekly candle. And if we look here, that's basically if we would draw a box from these two the peaks, what you have here is a resistance area. There you go. Now those are the levels that we need to watch. Let me go back to the candle chart, and I'm here on the 4-hour chart. Let's look at the gamma exposure map. So gamma exposure tells us that we are in bullish territory. Oh, there you have it. So yeah, no matter what analysis you do, you come up to the same conclusion. Even if even with gamma exposure, we have the highest positive Netgex level. It's 25,940, and that's again close to the open of the weekly candle and close to the TP we set up here. Now let's leave that as it is. I will leave that TPS where it is now. But if price makes its way towards the TP, I'd also watch 25,940. For bearish scenarios, I actually don't have any at this point because we are far away from where I would consider bearishness. So all the way 130 points lower into this, and even so we can look at the fact that the price has dug deep into this balance price range. However, we would need to see this imbalance inverted here, the price to come all the way down here, invert this imbalance to then make its way down into the bodies of the candles here on the 4-hour. Trading what I see on the chart, I'm leaning bearish, leaning bullish on the day, at least on the London session. That's it for today, and I wish you a good trading day for trading. Take care. Bye.